oracles. What a really nice way to start this week off. I know I haven't been here for a while. I'll get into that in a minute, but great green in the markets today. We have Tesla earnings and Netflix earnings coming out on Wednesday at the same time. Most recently, over the last couple of years, we've had Netflix kind of kicking off earnings season, kind of giving us an indication as to how the market was going to trade during that earnings season. Well, this time around, Tesla and Netflix are on the same day after hours on Wednesday. So tomorrow we are going to get into all the numbers, the expectations, and consensus estimates for all of the earnings for Tesla themselves. But to see the market going green today ahead of earnings gives me one of two thoughts. Either one, we can look forward to some good earnings and we can maybe see some green coming through this and actually get that push and that nice green fourth quarter that we have been discussing. Or this is some kind of buying coming into earnings and then maybe there's going to be a sell-off. Again, no one knows for sure how earnings are going to go or how the market is going to react to them either way, but this is something we just focus on here on this channel, and we'll take a look at some of this information in just a minute. All right, so looking at the charts for Tesla, again up 1.12% on the day, closing at 253.92. So we are still holding above this $250 level, which is really nice to see. We're kind of on this almost sideways trading here. We've shown this little dip, we've come up, and now we're coming back down. But again, trading still at that $250 level going into earnings. So yes, we do still have one more day of trading to go tomorrow before we get to earnings. But I have a feeling we're going to be hovering somewhere around this level as we go into earnings. And looking at the RSI, we're at 48.76 and volume is relatively low compared to where we have been at 88 million shares trading hands. So one thing we're going to be paying attention to when it comes to earnings for Tesla are going to be the gross margins. That there is going to be key. In Q2, we saw the lowest gross margins yet, and that there was kind of a little unsteady and uncertain because we're like, oh, is this going to be a problem? But Elon did tell us at the beginning of the year, hey, what if we drove margins down to zero? Not to say he was going to do that, but obviously that thought had crossed his mind, especially with interest rates going up. So now I've been seeing vehicle gross margins and operating margins coming down. Operating margins were under 10%. Now, looking at the numbers and where they were, we were guessing that was going to be the lowest point we were ever going to see margins, and they would tick up from there. Now, in this Q3, we've also seen more price cuts coming along, especially on the Model S and X. Those are their higher margin vehicles. Now, granted, they don't sell as many of them, but they make a lot more profit on them. So with those getting cut and cutting the prices of FSD, we don't know if the take rate on FSD went up to justify that price cut. If it did, that's good. It could wash some of those margins out, but we don't know that for sure. Now, we also had the Model 3 Highland getting released this quarter. That means that they spent a lot of money on all of the tooling and machinery needed to make this happen. Now, they may have absorbed some of that into Q2, but we also did not see any of those vehicles getting sold in Q3. Those are all going to be slated for Q4 sales. So while that's going to be an awesome vehicle going forward, we did not get any of that profit buffer coming from that vehicle in Q3, but we most likely took the profit hit from the manufacturing process in Q3. So margins may not be very good. Again, we'll look at the consensus estimates and everything tomorrow on all of this, but that's going to be the big focus for all of Wall Street when it comes to earnings on Wednesday. And just a reminder, on Wednesday, we will be doing a live stream. Peggy is going to be on here joining us as well. We're going to probably be doing it sometime around 4 just because of the time I need to leave work. So probably around 4 p.m. Eastern time, we're going to be starting that. That's usually about 5 to 10 minutes before we get the earnings release. So I'll be hopping on and we'll be ready right away for that earnings release coming out. Peggy and I will discuss the earnings release itself, and then we'll just stay live and answer all the questions and have chats with you guys right through until the earnings call, and then we'll play the earnings call live on the channel as well. So that'll be all for Wednesday. But now switching gears over to the dividend side of my portfolio, this has been huge for me. Now, this here is something I've been discussing with many people as to why my mentality shifted from Tesla over to dividends. And it's not that it shifted from Tesla to dividends. It shifted in a matter of how can I bring in more money to be able to purchase more Tesla stock? That was really the whole mentality behind all of this. In that process, I realized that this could truly benefit me in the near term more than just buying Tesla stock could. So now I actually have the opportunity to gain freedom of time while also gaining more money for freedom to purchase more Tesla stock for the future. It's a win-win situation. So when I'm looking at all of these different companies that I'm purchasing, I've got about 60 to 65 companies and ETFs that have now comprised my entire portfolio. All of my members and patrons get to see this on a weekly basis. I'm pretty much finalized with it right now. I'm going to call it my Oracle ETF. It's like an ETF that also has ETFs in it. So this is kind of how I'm running my dividend game, my Oracle ETF. So I will end up sharing that with all of you at the end of this month and disclose all of that information on there. But today we ended up getting the YieldMax payouts. This here is huge because these YieldMax ETFs alone are producing about $300 to $400 every single month for me to be able to either reinvest into those or invest it into other companies and other ETFs. So this is the whole premise. I'm doing this to get this big snowball built up. I do still think we're going to see a massive market pullback at some point in 2024. There's many people out there speculating that we're going to be seeing a recession as well. So if this does end up happening, we could see a 20, 30, 40, maybe even a 50% market pullback going in the next year. We saw this in 2022. We may see something very similar in 2024 on a broader scale, market wide, rather than just mostly tech stocks taking this hit. So if we end up seeing that, this means that Tesla will end up falling with it. I know going into 2022, we thought Tesla was invincible, could not stop, was just going to keep on running, didn't matter what happened in the macro. Many of us learned a very hard lesson last year, myself included, that the macro is always going to be stronger than Tesla stock itself. If that's the case, that means that we are going to see a great buying opportunity because we also learned that as it takes that hit, the strongest players are going to come out even stronger on the other side. We saw that with Tesla stock this year also, went from all the way down to $100 at the beginning of this year, running up to almost $300, almost a 3x in the span of about 6 months. Absolutely wild. But that is how you're going to see which companies are going to come out the strongest. Tesla is going to see that on the other side of this macro situation. Again, not guaranteed that that's going to happen, but the signs are kind of pointing to the fact that we are going to get this recession. We're going to get a market pullback. All of this cash flow I have coming in from all of these dividends, I can now put that money into Tesla stock. Thinking right now at $250, Tesla is a great buy in my opinion. But if Tesla's going to pull down to, let's say, 150, that's an even better buy. So I can take that cash flow coming in and distribute that into Tesla stock itself and buy even more shares. That is my current strategy based upon what I think is going to be happening in the next 6 to 12 months. Now, of course, I do adjust on a regular basis. If I see things that are going to tell me otherwise, I make adjustments accordingly. I try not to make too many adjustments too often because the market is manipulated that way. I look at my long-term thesis, I have my plans set for that, I adjust near-term stuff where I need to, and I let everything else run as normal. So that is my plan going into next year. These earnings that we're going to be getting for Q3 don't truly mean all that much in the long term. It's a lot of near-term stuff that's going on. Just another benchmark to say, where are we at currently with the company? Are we making the progress we need to be making? Are we making the decisions we need to be making? And then we move forward from here. Now, there's also a lot of people who are discussing buybacks again. Now, again, I do still think that Tesla at $250 is a great price. But is it a price that the company wants to do a buyback with if there's a lot of anticipation for a potential recession going on next year? This is one of Elon's fears that he's been seeing for the last year and a half. This is kind of one of the reasons why they haven't done buybacks, why they've been very conservative by paying off all of their debt, building up cash, kind of investing back into the business itself as well. They've obviously seen a lot of places to invest money within the business, so that took precedence over a buyback. Totally agree with that. That's what most of us on here agree with also. So if the company has areas of R&D or ways that they can grow the company that they want to spend the money on, that's where it should go. It should go to those places before it goes to doing any buybacks. Buybacks would be used with any cash that is left over after all of that R&D, after all of that self-investment. That's when it happens. So obviously with the Cybertruck coming up, the company's decision to make a switch from building the next generation platform in Mexico to doing it in Austin, but also putting up Mexico, trying to get the groundwork set to put up a factory over in India, getting Optimus up and running. Energy is pushing along very nicely. Dojo coming online. All of these things are obviously capital intensive. They need to invest the money there, and they did so. I fully support that and agree with those decisions. So whether we get a buyback this time around or not, I really don't know. Quite honestly, my thoughts and based upon how Elon has been discussing things, I have a feeling we probably won't see that buyback coming until we end up seeing the Fed pivot and come down on rates. When that ends up happening, that's going to build that pricing power back up that Tesla had so well going into this year. Tesla built up all that pricing power as the Fed had lower rates. And then as the Fed went up on the rates, Tesla still held that pricing power over the course of the year. But that's why they've been coming down on prices because they can and still have a margin and still make profits on their vehicles. No other company out there can say that right now that they can come down on prices and still make a profit. Many of them are taking losses on all of their EVs right now, so they don't have that ability. So there's a lot of discussion. Should Tesla be coming down on prices? Should Tesla advertise? I think they should do both. Now, when it comes to advertising, I don't think that they need to go out there and advertise and say, hey, come and buy a Tesla for X, Y, and Z reasons. I think it should be more of an educational piece for them. Should be something of, hey, EVs can cost less over the long run. EVs can be charged at home. Your EV is going to get better like your smartphone. It's going to become better. You could wake up in the morning and have a better vehicle today than you did yesterday. If Tesla can come out and share all of those things just on an educational EV standpoint, I think that would be great advertising that Tesla can do because the core of their business is to transition the world over to renewable energy. If that is the case, putting out an advertisement promoting just that with EVs and even other renewable energy, they could talk about power walls, mega packs, things like that. That I think would be a game changer and can really help Tesla and the entire EV market. Don't forget, when it comes to Tesla, the competition is a good thing. The more people who are out there producing good quality EVs, the more people are going to want EVs. They put up a Google search for EVs, Tesla's going to come to the top of that list. So Tesla by itself is going to naturally get the benefits of advertising on a general broad basis of education for EVs. So it would be very beneficial for Tesla to do just that. You can leave your thoughts in the comments below on what you feel about advertising and buybacks, but I think that if Tesla did the advertising along with price cuts as they have been, we're going to see it very strong. And then don't forget, we get through a tough economic time potentially in 2024, start pulling out of this after the elections in 2025. I think Tesla is setting themselves up for a very strong second half of 2025 and into 2026, and then finishing off the decade like a champion, potentially becoming the most valuable company in the world by the end of the 2020s. And one thing to note when it comes to not only Tesla, but all these other dividend stocks that I'm in, I take a look at these dividend stocks have been out there. A lot of them are dividend kings. A dividend king is a company that's been paying dividends for over 50 years. Pepsi, is one of those companies who is doing that. Now, my thoughts on this are, obviously Pepsi is a great company. They compete with Coca-Cola. They're kind of that duopoly that's out there in that market. Difference between the two is Pepsi has snacks along with their drinks, whereas Coca-Cola is basically just drinks. But here's what I look at. I go to my son's soccer games. Every one of these soccer games, one of the dads on the team will grab and buy some stuff and, share his snacks with me. So Fritos, guess what? Frito-Lay, that is owned by Pepsi. He grabs Pepsi's. Every single school that we go to has a concession stand that has Pepsi products in them. That is a very recognizable company and brand when you see them. Now I'm also seeing a lot of Teslas when I go to every single one of these games. All of these Teslas that are out there is that brand. And Tesla is building that brand recognition that companies like Pepsi, who have been paying out dividends for 50 years and that well known, are there. Tesla can be that type of company. You go 50 years down the road, I have no doubt Tesla is going to be paying dividends at that point, and I have no doubt that they will be a dividend king after they start paying dividends, and I have no doubt that they will pay them for 50 years plus. Now, the other thing that I noticed about Pepsi is, don't forget, Pepsi is that company who is out there right now with the Tesla semis. So for me, Tesla and Pepsi together are going to be awesome. It's one of the reasons why Pepsi is one of the top dividend holdings that I have in my portfolio because they're utilizing Tesla. Now, I also purchased Oracle in my portfolio. Guess what? Oracle's talking about how they're going to be utilizing the Cybertruck as one of their vehicles. So a lot of big companies that are out there right now are going to be utilizing Tesla for the vehicles in the future. Tesla's also going to have Optimus that's coming out. Optimus is going to be helping in these factories. I have no doubt a company like Pepsi is going to be coming out here and purchasing Optimus robots to help in their factories once we get to that point. Then we're going to have AI. AI, and all of this is going to be coming out with FSD. So guess what? Pepsi's going to have this semi truck that's running out there. They're going to have Optimus helping them in the factories. I have no doubt they're also going to utilize FSD to be able to drive those trucks all over the place to deliver all of their products. That is going to help Pepsi cut down on costs significantly, thereby increasing their margins over time, and Tesla is going to profit accordingly with that. All of this ties together, and I'm choosing a lot of the dividend companies that I purchase because of things like this, because of Tesla. Tesla is going to be able to support a lot of these companies if they choose to utilize them. So, any companies out there that I see are utilizing Tesla for their own benefit, I am going to be picking those companies up to purchase for myself. That's just part of my own strategy. But you guys can let me know down below how you feel about all of that as well. So that's all I've got for you guys today. Again, I apologize. The last week has been absolutely insane with my son's soccer games. I had to work on Saturday as well, working late nights. I'm moving, so I've got boxes sitting right next to me that I need to fill up over the next week before I move. So I thank you all for your patience, and I appreciate that. Next 2 weeks are going to be a bit rough. Big games of soccer still going on. I have to get moving because on the 28th is when I actually move. I'll get on here as much as I can for you guys. And then once I get settled in, hopefully we'll be in a much better situation. But otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.